You'll hear me talk about the professor, the chimp, and the computer. Right? That's the three different aspects of our brains: the professor, the chimp, and the computer. And we always say, and I think as you hear it, you can probably start to piece together who does what, right? But the Sunday's the day when the chimp's asleep in his cage. We know when the market opens. Even if he's in his cage, he's awake. He's shaking the cage. He's making noise. He's trying to get out. He wants to go get his hands on that keyboard. And the professor's doing everything he can to get as much she can to do as much work as possible to prepare for the week to keep that chimp in the cage. Right? That's that's what we're doing here today. All right. Welcome everyone to Market Watch Group Sunday Market Insights. I'm Scott. I will be your host. As always, please keep in mind, this is for education, illustrative purposes only. We are not brokers. We're not advisors. We don't give investment advice or trade recommendations. We talk about ideas. We exchange information and ideas. It's an amazing collaboration of minds. I'm glad you're here to be a part of it with me. What are we going to do today? So I'm trying to keep it into that. That breakdown. I haven't officially done it yet, but I'm trying to get the market posture in the first half hour, the internals, right? So if you're new, Tony, this is going to be a little bit fast and coming at you. And I want you to just kind of be like, okay, at the half hour mark or close to it, then we get to the part where we say, what are the implications of all this? What do we think about our watch list? What trades are setting up? What's our focus list for the first couple of days next week? Are there any weaknesses in our watch list that we need to start to flesh out a little bit better? I'm thinking initially consumer discretionary, one of the strongest sectors that we've been seeing over and over again, but I don't know that we have enough good representations in there. Most everything else I feel pretty good about, but that's the kind of thing that we want to be doing, right? Is how does the rubber meet the road? How do we take the posture and turn it into the now what? That's the biggest question at any given time, at any given day. Now what? What are you going to actually do today? Are you going to pull the trigger? Are you going to get in? Are you going to get out? We actually, interestingly, and tell me if you saw it. Tell me if you took it. Tell me if you thought about it. But on Friday, we went through and ended up putting out a trade alert. What kind? A hedge. Now, if you don't have any trades on, you have nothing to hedge. So if it was to hedge, you would be like, I don't need to do it. I don't have anything to hedge with. Then it would veer into, well, if not a hedge and you don't have anything on, do you see enough concern, i.e. / weakness, that you would want to try to speculate to the downside? Because the trade we put out was a put. It was a 5% out of the money. Excuse me. 5% out of the money, 5 weeks out in time. Put. Now, that's that. I marked, in fact, before I even finished talking about the agenda, I'm going to stop and talk about this one because I do think that this is important. So let me bring this up because this was the first one of these that we did. And if you're new, this will just kind of help walk you through our trade alert table here. So you can see here, symbol SPY. So this is market-based. Direction. I mean, look, we've been just bulls on parade, if you will, in the market as of late. There's really been nothing but a hedge and only here or there. But this direction is bearish, and I put hedge very specifically to know that this is if you're carrying anything through the weekend. I asked, some people were, some people weren't, right? And so I said, look, if you're carrying trades, you might think about this for a hedge. If you're not, would you still think about this trade? But it requires a different mindset. It would require a mindset of a bearish speculative. And the biggest thing is, number one, have you ever made this type of trade before? And what I told people was, if not, and what I'm saying now is, this is the type of thing that getting a little bit of paper trade experience can be so helpful, right? So if you haven't been or aren't, make sure that you are incorporating paper trading into your learning process. Absolutely critical. Okay, so what do we know? We have a sense of an entry range. A little bit of a stop, like, hey, if this thing goes against us, a stop on this case, since this is a bearish trade, is above. So if we're entering when the market's around 602, then if it pops to the upside and takes out the previous high, then in that situation, we would say, oh, you know what? This hedge is no longer necessary. And what we would hope, or this bearish trade is no longer valid, right? We have some targets that we talked about for where would we look to take some money off the table, how much time, what's the reward to risk ratio, the volatility index. Now, part of the reason we were looking at this is because the VIX got back into a low area and gave us an escalation signal. You're going to see that here in a minute when we get into the market posture. But we're always going to talk about the volatility index. Why? Because we want to know, are the options, this is the index, this is the assessment for our optionisms. If you trade stock, you could literally trade whatever you need from the top part of the alerts. So if you're not an options trader, great. Ignore the bottom. You could short the stock from 602 down to 580 and cover at 610. So and same thing on the long side. When we give out a trade alert, we're going to give you the stock information first, because an option trade is derivative. It's based off the stock. So we'll give you everything you need to have a sense of, what am I doing with this? And that way, if you prefer spreads and I put a long option, or if you prefer long options and I put a spread as the trade of choice, you can simply decide, you know what, I'm going to take the trade given by the parameters established, and I'm going to build my own trade. I'm going to work it my own way. That's really what we want, is to lead you so that you're right. We're not going to give a bunch of follow-up on this. We talk about the trades, but we're not going to send out alerts. You need to be managed. If you put the trade on, you need to be managing it. You need to be watching it every single day and own that trade. So you can see here, I went 570, which is approximately 5% out of the money, a little further. I went March 7th, which is 5 weeks out in time. That's actually very formulaic when I do hedge trades. So we'll see this again when another hedge signal happens to show up, and I'll show you exactly where this came from. Okay, let's dive in. What are we going to do today? We're going to go through the posture. We're going to look at the economic calendar, think about what the week ahead brings. It's first week of the month. That's a cycle. First week of the month, what do we have? Employment, right? We'll have job openings. We'll have ADP's private payrolls. We'll have weekly jobless claims. We'll have Department of Labor non-farm payrolls. Just a slew of employment data. That's been a cornerstone for the market. It's been strong. It's helped. It's buoyed things. We'll see if it continues to be that. What sectors need some searching? We're identifying what sectors need searching so that we can do that on Tuesday evening in our working session, in our Trading Foundations class, in the open session. We're going to build our early week opportunity list. It's the focus list. So we have a watch list with, I don't know what's in there right now, 70, 80 stocks, very carefully curated to be full of bullish stocks with high liquidity in strong sectors. That watch list is always available to you to grab from the resources section in the Circle community. although I probably do need to update it now that we've been shaken up a little bit. And we're going to talk about the trading plan section of the week. It goes fast. We're already on section 3. So if you're just getting started, what should you think? You should think, all right, I'm going to start looking at section 3, and I'm going to try to get a couple of extra minutes each week to go back and hit sections 1 and 2 to at least get something on the paper. A sentence, something. Right? It's that first step. That's what people struggle with trading plans. Having coached traders now for, it's been a while, over 20 years now. I can tell you that's the most difficult part, is just starting. They look at it and they think, I'm eating an elephant. Great, take a bite. I don't care where you start. Take a bite. We can start in section 3, trading rules. 1 hour each week. If you give me 1 hour a week dedicated completely to your trading plan. Now, if you're starting on section 3, you need to give me a little bit more to catch up for 1 and 2, or you can just, we're going to keep cycling at this point. So when we get all the way to section 8, what do we do the next week? We start back with 1. And it's a loop. It's the trading plan loop. That's going to loop over and over again. And you can get on and off and work on your trading plan. But I'll tell you this, 2 passes on the loop. After that second pass, so that you've worked on each section twice independently, at the end of that, you will have a stronger trading plan than you would have ever imagined. It's just breaking it down, working on it in a group, collaboratively, where you have the ability to hear us talk about it, give you some guidance during the sessions. You have the ability to pop in. There are videos available for you about each section that gives you guidance. There is a sample plan available so that you can read it and say, hey, you know what? I don't want to reinvent the wheel. I'm going to start with something and then start to make it my own. Beautiful. Let's work on that. Okay, let's dive in. I'm going to go fast. That's the warning I've been giving, and then I end up just kind of talking. Sometimes I get on my soapbox. I can't help it. But I'm going to try continually. I'm going to make sure that I'm checking in and saying things like, if you're new, does this make sense? If you're new, what you should be thinking is, as a newbie, your thought process should be. Things like that, to make sure we're checking in and making sure we're connecting if you're just onboarding, and making sure you feel comfortable with what we're talking about and what we're doing. All right, so I'm gonna fly through this 6 components. We know, once again, in circle, and at the end of the meeting today, if you stick around, I'll actually just go in there. But if you took the tour, you know where these videos are, these courses are, and each one of these is only about like 12 minutes, where I just walk through, what are we doing, what are we looking for, what does it mean, why is it important, and it just gives you a little bit more context. So long-term trend, 2 points out of our 10, pretty important. Again, it's been between 1.5 and 1.25 for months and months and months and months and months and months. It just hasn't changed. Also, and I know it's a little bit behind, so as I'm saying this, I'll go add the last few weeks. But you can download a copy of our historical posture so that you can go back. I invite you, I challenge you to go back. And what you can do is you can take, we're getting, you know what? I think I just got locked out of my Thinkorswim. So give me 1 second here. On my other screen, I'm going to be talking to you while I'm trying to get my Thinkorswim to re-update here. I apologize. We'll pop into a couple of other things while that's going on. So I guess I do have a minute here to talk about the overall structure and process.
while I get my account to reload here. Let me pull this over to the other side. Sunday's a funny day if you're on Thinkorswim because I will reload it and then it still will reset because it goes through maintenance. So you'll find that even if you update, there are still times where it just sort of like pops you out. Anyway, this shouldn't take long. 10 points, right? This is probably good for some of you who have even been around for a while. First part of this is all trend, short-term, long-term, 2 and 3. That's 5 of our points right there. Then we have a section of 1-point components. Volume, major market, which is what we would refer to as appetite for risk. We have sector rotation, which is money flow. Where are the institutions moving their money, right? And we have the VIX, which is institutional sentiment. Now, some of these, let me move this again, some of these are more important than others because they don't just give us points. Like the VIX doesn't just give us points, but it gives us an understanding of how options are priced. Are they expensive? Are they cheap? And what type of strategy should we use? Sector rotation helps us pinpoint the right sectors to make sure we have with representation on our watch list. So we do score these according to this point system, and that helps us to understand strength and momentum in the market. But in addition to that, we get other information that gets used in our day-to-day trading as we are making other decisions. So what's been going on? Let's just set a little context, and then we'll be ready to go. Everything looked great. After the election, we popped very quickly. We got up into the 6s. This 6s and 7, that's as high as it gets. Or as high as it's gotten, at least for us, in the last, coming up on 2 years. So you have a good amount of data that you can go back and actually compare and say, hey, last year there was a correction around this time. What did the posture do? And you can go look and see and get a sense of when did it recover? When did it start to move and get into this area and signal us? And what's happened now? Well, we know that we dropped and then we dropped. So we went from a 7 to a 6, 5.5. These aren't huge drops. We're still staying in a bullish area, a bullish mentality. There's our charts. Let me just minimize that, and then we'll get started. Yeah. So let me get it to 6 months. What are we looking at from a time frame component? From here to here, right? What has this market done? It's just kind of been in this sideways chop. We said January has that tendency. We missed right through here. We missed the last piece of our Santa rally. We're like, where'd you go, Santa? Yeah, okay. But for the most part, we had a very bullish fall and into early winter. January's chopped around. We've mentioned how much that tends to happen from a cyclical standpoint. But when we go back and we look at the posture, you can kind of see what our posture is doing here. A 6, 5.5, 5.5, 4. And then we went from 4 to 4.5 to 5. So this last little bit, there's been some strength coming back in. Nothing here ever really derailed us that much. And so sometimes people will be like, well, could we make money bearishly? No. Look at this. That one day, our posture was still very bullish. That one day was basically most of this entire move. And then it chopped. Was there a lot of bearish meat to try to catch there and then watch it pop back up? No. If you took this as your signal, by the time you got in, and then by the time you got out, maybe you could have picked up a teeny little piece. And in doing so, you would have missed this, right? Because you were focused on a bearish trade, you would have missed the only actual time where we put on bullish trades and made money. We put on several in that area and made some money on them. Cisco, Walmart, right? Like, So that's the thing, is you can't trade in a vacuum. You can't be putting bearish trades on and bullish trades on, just back and forth, and think that you're not going to distract yourself from, hey, I'm managing this, and oh crap, I missed the entry over here. Like, let's be realistic as traders, setting expectations about what we think is going to happen. What should we, how much money should we make, and where should we be trading from? Another point of fact, there is a document in our resources. This struck me to remind everyone of this. It's a downloadable document, top 10 trading mistakes, number one of which is setting expectations too high too soon. It's a great document that just sort of walks you through some of the mistakes that we see new traders make over and over again, why they make them, and how you can start to maybe pull yourself out of that trap. But as this is our market posture, our thought process is what? Now what? Well, as we, I'm about to get into the scoring, but we're very close. Let me just say this. This was strong. Then it pulled back, and then it started another move. So we thought to ourselves, that's a potential bull flag right there. And then what? And then Friday hit. And we have this bearish engulfing candle. From what? News. What kind of news? Tariff news that scares the markets. Now, we know that there's times where he would say, oh, I'm going to do this, and then it doesn't happen. And there's times where he says he's going to do it, and then he does it. And so there's some uncertainty, and we know that the market struggles to some extent with uncertainty. Okay, well, that uncertainty is also right here in our score as it's dropped and then stabilized, but just sort of stalled right here. Which means what? Which means we would be willing to trade bullishly coming out of this, no problem. We've already started to show that. But we were also saying that this thing has dropped from the 7s to the 5s, 4s and 5s, and that if it's going to be a correction, which is a 10% move, we've only seen half of that so far, right? Then our posture is going to continue dropping probably towards a 0. That's about what it looks like with a correction, typically. And so the question then becomes, well, what would you want to do with that if it comes? If these tariffs do come, certainly that could be the type of a catalyst that moves us in a corrective, i.e. 10% direction. Okay, now let's go fast and score. We have context, but we're not trying to trade with a bias, right? Let me go to the 3-year weekly chart to score this first one. Right now, right, the green lines and the blue lines, which are just slightly different versions of each other, that's our 1.5. And what we said is we're not really holding up in that 1.5 zone. So now we're looking at this red one, that's 1.25. It's definitely holding up in 1.25. But when you look at what's happened at the market, basically you should say that, yes, and ever since this point back here, now this was our last correction, right? This here, that was 10% from here to here, 10%. Now from that last correction, this was close on the SPY, but not quite. I think it hit 8%. The rest of these are where we get these little 4-5% consolidations. So the question is what we're in now done, and it's just one of these and ready to move back? Or is it going to do a little double dip like one of these and turn into a little bit more? We don't know yet. We don't know that. We're going to be water, whichever way it goes. We're going to be ready to adapt to it very, very quickly. But these are the questions that we're asking and answering right now. As far as a score goes, I'm firmly in the red. Great. No need to change my score. We have not broken anything that makes us overtly concerned. If we broke this red line, that's going to make us concerned. If we break this low here, that's going to make us concerned, right? So first point that we're hoping holds is there. Whoops. First point that we're hoping holds is there. Second point is here. As long as that holds, the institutions are still managing an uptrend, and we're not really all that concerned. Okay, so what does our score do? Stays exactly the same. My 1.25 still 1.25. Great. Next, short term. This is worth 3 points. Why? Because this is what we trade. The institution's important. It's 2 points because that's the big money. But this is what we trade. This is our people here. So we're going to give this a little bit more credence. And what happened over the last week? We got to this high back here. And we took out a couple of these here. And we actually gave it a 0.5 point last week. We gave it a 0.5 point last week. And then this week it came down, turned up. That's a higher low. I think that's worth a 0.25 point right there. But. This is a lower high. It rolled over with that engulfing. So for that, I'm going to say minus 0.25 point. And what happens? They cancel each other out, and there is no change. That's my score. As I'm going through this, I would love to hear from those of you who are scoring at home. Do you agree? Do you disagree? Is your score staying the same? Is it changing? Higher, lower? Let me know. Let the others know. It's nice for them to kind of see how others in the group are participating and contributing in the scoring process. But for me, and it was going to go up, right? We were like, ooh, earlier in the week, we're like, ooh, this is gonna gain a 0.25 point. And then what happened Friday? Bang, that news came. Everyone's like, oh, he doesn't mean it. He doesn't mean it. And then all of a sudden, the White House puts out that statement. Oh, we mean it. And then, boom, the market's like, crap. So, my short-term or long-term score stayed the same. Short-term score stayed the same. Volume. This is where I'm concerned. This is where my concern comes in. So, we're going to move this down to a 1-month daily. You can see that all of that back there has now fallen off. There used to be something there, but we don't even care because it's gone. But what do we have? We have a sell and a sell. Both of those are a little, like that's a little stale. This one's still kind of like at play. Is it a lower high even before 2 candles form to the right? Yep, for me with an engulfing, it is. That engulfing candle, that is a complete. If it was like a doji, if it was a, hanging man or a, falling star or even a dark cloud cover, which is like it's kind of engulfing, but it still is just sort of sitting on top of it, then I would be like, I need another day. But the fact that it completely engulfed it is like one of those few self-confirming candles. Phenomenal question. I'm so glad you asked it, and that's why for me it is. Although there are some people who have additional criteria, but for me, and in that situation, it's enough. Okay. So what do we have here? We have a couple of selling days. We got close. And then we got another selling day. And then here, and remember I said, I think we're going to end up a selling day. You can see that this volume is above average, definitely. Why is 127 a sell when green? Leave it to Bob Rowland to ask a great question. Good to see you. Why? Because what we're really looking at is here is the close of this day. And here is the close of this day. So the net result is it dropped from 609 to 600. I don't know. 600, I think. So that was a 9-point drop, which is minus 1.5%. Now, at one point, it was down 2.5%, right? It was all the way down here at 2.5%. And so it gapped all the way down, and then the buyers got back 1% of it. But at the end of the day, the sellers still won the tug of war because the buyers ended up all the way down at 600, right? And it's funny because I'll tell people that I actually see a candle like that very similar to something like if it gapped, ran down, came back. That's a hammer. Those two to me are not all that dissimilar. It's just that one had a little bit more overnight reaction. You guys are asking such good questions. Details matter, right? The details matter. Now, Stephen, to your point, this could be the deal breaker for some people in regards to the engulfing. When I'm looking at the engulfing, I'm mostly looking at the body, but some people require that you engulf the shadow, and you can see the shadow, they were pretty similar, but it didn't completely engulf the shadow. So you could basically be like, you know what, Scott, I'm actually going to just give that a second day before I'm convinced. Okay. Then you would actually raise your score. That's a fully valid thing. Like, the objective here is not score the market like Scott. The objective here is use the same process Scott uses to score the market, and then let's talk about it and let's see. Because, right? Yes, that's the objective. And so, there are times where it's just like, oof, we feel like we have it. And then there's like, you're within pennies and you're like, is that count? There's always some measure of subjectivity in things like these analyses. There's nothing you can do about it. But for me personally, I feel like that's okay. It's okay if there's a little bit of you having to make a decision. I think it's better for us just to get comfortable with that. Okay. Fantastic. Let me erase. So what is the bottom line then? Well, the bottom line is this is another. No, I don't want to activate it. I want to duplicate it, move it, plant it. And here's the thing. We went from 605 to 602, 3 points. That's 0.5%, right? But we're still giving the sellers credit for that, right? That's still enough. If it was only like 0.2, then I'd be like, that's not enough. But 0.5%, we've got to acknowledge that the sellers are there. Thank you, Phil. I think I did miss that. Let me see here. Let me scroll up. John Welsh, thank you for your question. Phil, thank you for flagging that. Do we expect first month of institutional buying to impact next week? I mean, it's we do have expectations set from cyclical analysis that we tend to pop out of, the January as more of a sideways month into more of a bullish February. Yes. However, I believe that right now the binary catalyst of the threat of tariff that looms for Tuesday is more like, I think institutions are watching that more than any cyclical pattern of behavior that we might normally expect. That's how I would see it. And so if we didn't have that news, I think we would have been bullish, breaking highs, and heading into bullish February. Yeah, that's what I think. If we did not have that announcement that reiterated, no, we're planning to go forward. Like, it's like they are committing to this tariffs thing, and it's like, tariffs notoriously raise prices. So that is not going to contribute any way but negatively to the current inflationary situation, right? So I think that's why it turned. I mean, yeah, Friday looked great, right? Friday looked great. And then by the end of the day, what happened? I took profit on one trade. I took a loss on one trade, and I am carrying one through from our alerts. Right? The alert, I think BAC would have been fine other than that. And then it turned around, and there it goes. Unless we get rid of federal income tax as a result. Yeah, not with the corporate tax structure cuts the way they are. We can't fund the government on I don't think anyone's done that math. I don't think we can fund our behemoth of a government on a few $100 billion in tariffs. Okay. Let's keep rolling. Let me get somebody in here. And so what am I going to do with this? I've got 4 cells, 2 of them fairly fresh. Yeah, I thought I might do it. I'm going to knock this to a minus 0.5. Now, if next week no new volume bars show up, if next week nothing new shows up, this is going to fall off. This is going to get stale, and we'll only have 2. And I'll be back to a minus 0.25. 2 to 0, I would be a minus 0.25. That's in favor of the sellers, but just a little bit. Sandy, I hope everything is okay with the urgent family matter, and it's amazing to see you. Glad to have you for any time at all. All right, let's keep going. I said we're going to go fast. I always lie, it appears. I don't mean to lie. It's not an intentional lie, but it does ultimately turn out to be a lie. I mean, you guys are partially to blame because you ask great questions. So, I mean, that's kind of why we're here. Okay. Major market. The major markets, the Dow, blue chips, the NASDAQ, technology, the Russell, small caps, and the S&P, the 500 like watermark, the standard. How are they moving relative to each other? Well, from this bullish perspective, we would definitely expect NASDAQ to be in front, and it is. If it was a very strong market, we would expect the Russell to be there too, like it was here, but only temporarily. It keeps trying. It tried back in July, then it failed. Right? This is when we first started getting some Fed in our wins in our sales, and then the election, and it's like, oh, that's what we need, small caps forever. And then it just sort of fell back down. So I don't know. We'll see. But this is at least a bullish start, right? But it's only a half of a bullish start. We only have one of our 2 leaders for the full score. Now we drop down to 133. We go from 9 months to 6 months, right? 6 months, what happens? Well, in 6 months, the Dow's at the top with the NASDAQ and the S&P and the Russell down here. Now, this is where when we see something like this, we have to stop and say, wait a second. Is that defensive? Or did that just happen to pop up there here in the last little bit just due to the fact that it didn't dip as much, and this still shows the August. So in the August, it was corrective for the NASDAQ, 10%. This says 9, but it was more like 10. And this was about 8, yeah? So when the Dow only dropped 3 back here, that makes it easier for it to look good over here. So that's kind of what we're starting to ask ourselves. Defensive or just coincidental with this? I think it's coincidental. I'm open to it being defensive. Let's see if we move time frames from 6 months to 3 months. Now we've got the NASDAQ back up top. Dow is on top. Actually, now I am a little bit like, wait a second. On the 3 month, you can see it was at the same spot as the Russell. And the Russell made about a 3% jump, and the Dow made about a 6% jump. So yes, the NASDAQ is on top, but I'd say that's the second place that we've now seen the Dow move into a leading position. I believe I'm seeing enough that I might take a quarter of a point away here. Let me hear from the group on this one. Now, I want you to notice we've got a little bit of uncertainty here. A little bit of uncertainty. I'm at the 66. This is where I want to get my score from. And I'm thinking, I'm on a fence. The fence is, do I leave it as is, or do I take a quarter of a point away to acknowledge that the Dow showing up as a leader in 2 spots is all of a sudden starting to feel and look a little bit defensive posturing, right? So what do? Let's go to the 22. Where's Press when I need him? Press would be calling out for the 22 right now. He loves the 22. We go to the 22, and what do we see? We see that surge of the Dow so clearly all of a sudden. We're like, oh, goodness gracious, look at that Dow. That all of a sudden takes on a little bit of a defensive feel. As such, tell me what you guys think. I am dropping this a quarter of a point. So we got a half a point back here, and then we lost it, and we may even lose a little more. It has me slightly concerned. Let's go to sector rotation real quickly. Make sure we have time for our watch list. Steven kept his the same. Fair enough. What charting software am I using for these comparative charts? John says. That is, these are some free charts, and I want you to know, so I am going to have to pause for a second. Let me go back to them for a second. You do have to, suffer the ads. So if you ever are like, do I need a subscription for this? Absolutely not. Never buy that. Unless you want it for something else, but not for this once a week. No. So this is stockcharts.com, and this is just a real quick, easy setup. And if you look, let me bring this over. On our community page, if you scroll on the left-hand side all the way down, you've got all these links right here. Any of the things you see me go to, the economic calendar, you can get our current watch list from here. You can get the historical market posture from here. A heat map, the Fed Watch Rate Tool, major market analysis. If you click this, that gives you exactly the start of that analysis, 200 days. So it's not really software. It's just I guess it is software. It's SaaS. It's online. Sector rotation, same thing. Starts at the 200 days. If you want a bullish search, Bob says he's asked about matching colors. That I haven't figured out. That's the problem with using that is I just assume it should show up as the default. Do you click this link and it doesn't show up as that as your default? I'm wondering why it won't. We'll look into that. Thank you, Bob. Additionally, remember that these courses, I was going to show you this. Market posture is right here. If you want to look at any of these are available for you. So if you're new, it's a great place to go catch up. Okay, so I did drop my score. Let's go to sector rotation. Let's start this thing back out at 200 days. What are we doing with sector rotation? We've got the broad sectors, discretionary, communication services, technology, industrials, materials, energy, staples, healthcare, utilities, financials. Thinking about it in terms of what do we want, what do we need, and what's being used. So energy, materials, utilities is being used. You think about things that we need. That's your healthcare. That's your staples. That's your utilities. And then you think about what's going to grow. That's discretionary spending. That's technology. That's industrials to build things. That's financials to finance things, right? So when we look at what's on the top, discretionary, still clearly on top. What does that mean? It means stocks where people are wanting to spend money are doing well. Who else is on top? Financials. We're financing things. And then there's utilities. Now, utilities we've talked about as being a little bit more unique because of AI and because of crypto. And it's become almost quasi-growth oriented. So we're not really seeing that as defensive as of now. Communication services, growth-oriented. Technology, growth-oriented. Industrials, growth-oriented. That's exactly how we want to start. Where's all the defensive stuff? Staples is down here. Healthcare's down here. Energy, materials. That's a good start. It's a good bullish beginning. We drop down to 133. Do we see changes? Still discretionary. What is that? That's where the institutions are moving their money. They're putting their money into discretionary. They're putting their money into financials, utilities, communication services, industrials, and down here, even still technology. Still bullish. We don't see defensive shifting. Still bullish. Okay? Phil's question, he said, how do you expect tariffs to impact small cap versus large cap, and are you adjusting option strategies accordingly? Interestingly, I really don't trade a lot of small caps on options because they don't have the liquidity, usually. The only time I typically trade small caps with options is the IWM itself, which I haven't been doing lately. And so I would say that large caps are more insulated, right? Like any small cap stocks that have any kind of need to bring in imports is going to potentially be impacted by it. But I think it's going to be, I think it's just going to be somewhat of a inhibitive environment, right? Like generally across the board, more so than any. I think there will be some that are going to be more focused. Like anyone who has their business oriented and is certainly going to be concerned. That's a great question. I don't know. It's been a long time since we've seen a heavy tariff environment, right? Okay. 66 days, more of the same. Discretionary, communication services, financials. There's technology showing back up. Energy's dipping a little. Industrial's moving forward. Where's all of the others down here? I don't see any shift in money flow. The sectors are still positioning their money. We'll go look at 22. I don't need to look at 22. This is still kind of a jumbled mess in here. But for me, the sectors is actually still the strongest component. Where the institutions are putting their money right now still just is lined up, all signs pointing bullish. So this is still a 1. And now let's go finish with the VIX. We'll have time to go through. Stephen agrees. I love it. Let's go take a look at the VIX. 2 things happened last week on the VIX. Same as where's my drawing tools? And there they are. Right? It didn't move up, but it popped up and then it turned over, which means that this low or high was lower than this high. And a lower high, which is de-escalation, right? Which is de-escalation, is a plus 1/4 of a point. Now, this is the same thing. This is a higher low by way of, and this is like right there at the line. It definitely was earlier. I have that. This is what caused the hedge. Is this coming down to this level? This is our old low. That's the reference point. Even the little shadow didn't get down close enough, but from a body perspective in this turning, that's that higher low perspective that has us cautious. Now, again, right at the end of the day, this finished where it's like it could be a judgment call. My judgment was this was a turn, which does turn this into a low, which makes this low higher than this low, a lower high. Remember, this is an inverse indicator. Those two wash each other out. This is what led to the hedge right here. We'll see if it plays out or not. If the tariff situation, you've heard responses from both Mexico and Canada that said, we're ready with our responses. So they're going to tariff back. And that's where everybody suffers, right? It's inhibitive as a business environment in that situation. If it achieves some greater good strategically, yeah, okay, I guess that's what you're hoping for, because it's going to derail a lot of other things like inflation progress and growth. So if that continues to escalate, I think that this is going to continue and possibly shoot. And that's what the concern is. If they back down from those tariffs, then the market, I think, will actually rally pretty strongly. And if that's the case, we better have some bullish trades ready to go. There it is. So what's my score? No change. No change for me on the VIX. Let me know how you scored yours. Stephen W. said engulfed. I have it the same way. That's why I took a quarter away, gave a quarter, took it away. Net positive or net result unchanged. Let's get to the watch list. Same score. Yes. So I end up at a 4.5. So we went from a 4 to a 4.5 to a 5 to back to a 4.5. And now it's right, we're right at a key moment for the market this week. Can we get through the tariffs, pop out of this? I think we're heading back to 6s and 7s. Strong February, March, April. Tariffs come in, I think we may head into corrective territory. And this thing could continue to then have another drop back to then we drop to a 2.5 to it, right? So we're just kind of, it's precipitous. It's right on the edge. Went from a 5.5 to a 5. Steven dropped a 0.5 point as well. Okay. So what are we thinking here? We're thinking, let's be cautious. Let's be ready. Because if we do survive tariffs, this market is it's gonna go. And we don't want to spectate that. We want to be ready to get in, even if it's with continuation trades. So let's get to the watch list. And am I on the right chart? I am. Yeah. I actually still like Apple just fine. Same kind of thing. It gapped up. And imagine if you didn't see this red candle, but all you saw was this rolling over. That's still enough for me. That doesn't bother me at all. If this thing can stabilize by 230, I would definitely be looking for a bullish trade on Apple coming out of that. Amazon still looks bullish. Unfortunately, we've got earnings coming out next week. It's going to make it hard to find a trade. Otherwise, I'm going to put it on my list because I do still like it. I just don't know that it's going to give us time to catch a trade. AppLovin. Look, all of a sudden you can see it went up, it dropped a little, went up a little higher. I think yes, I would be willing to consider a trade on a small pullback from here. AXP, we took it, we're in it. We're hoping for the stabilization to push these things a little bit further. Got a nice signal, higher high, higher low, nice little turn. We're happy with the signal. It did not violate the way that this other financial trade did. BAC, you can see we got into BAC here. We tried and it just couldn't. All right. That's fine, right? This was a very, very small loss. The AXP is still intact. I think we're going to still be fine, personally, but we'll see what happens. BX is actually still in a setup mode. If you're not in a financial trade and looking for one, that's the kind of thing I'd be looking for. Caterpillar, I'm going to say this has moved past here. I loved it. It was getting ready for a pop out of a consolidation. Now it's too much. Now it's in it's got to do a little higher high, higher low dance for me before I'm ready to take that one. CLS on a pullback, yes. If it gives me the pullback, I will definitely trade that one. Cisco, we like Cisco. Cisco actually was a viable trigger, and I think a couple of people took it. Let me know if you're one of them. Delta gave a valid signal. It rolled over. That one might be enough of a roll with the bearish engulfing to close it. It hasn't violated support. So that one, I'm still thinking that could be a hiccup. And it could pop out of that. We've seen that before. Okay. Fastenal. Oh, man, that one was looking good too. We finally broke out of this consolidation, got up here on the pullback. I would say it's still valid. If it goes much further, then it's too far. I don't want it to flirt in this under this 72.5 area. But if it stabilizes and turns from there, yeah. Flex. So I'm going to be very, very cautious with any of these that got beat up on Chip Madness Monday. That's what I'm calling it. Chip Madness Monday. It gapped down. It actually gapped to here, and then it sold off. And you'll notice that it's really struggling to get back above that gap area, right? And so maybe if it comes down here and it doesn't get all the way, then we could consider that a sneaky reversal and that it can pop from here and start to turn. But until I see something like that, persona non grata. All right. GBTC, iffy. There's another one. Chip Madness Monday. It's just, I don't know. I don't know from here. If it comes down and it doesn't, then we can think about it. Then it's a very different conversation, right? Gold, strong but not buyable. Google, strong. It's got earnings coming up here in just a couple of days. We'll have to keep our eye on that. Goldman Sachs, I still like for financials. Still some strength in financials. Howmet I like. That one would still be viable on a pullback, right? There's still plenty of strong stocks for us. If we have just a couple of days pullback and then it turns on Tuesday because no tariffs come, let's be ready. IBM, that's a tough one. It's hard for IBM to move after it just made that, but maybe on that pullback it's ready to start going again. Let's put it on the list. It's intriguing, right? International Paper, right where it needs to be for a nice looking cup and handle, right? We had this old high, pulls back, gets back to that other one. There's the cup. It's a deeper handle than that, but there were some mitigating factors there. If we get that turn, I definitely think that's valid. That's viable. We'll look into that for sure. So what's the bottom line? We do have things to consider, right? We definitely have things to consider. KKR, I love. I'm definitely going to be looking for that one after it's done with earnings. We had 3 good trades on that last fall in alerts. MasterCard, yes. Hopefully MasterCard can help put a little influence into AXP. Meta is a yes. Meta looks great. They feel like they're insulated from this deep seek. They didn't really get hit on Chip Madness Monday. Morgan Stanley still looks good from a financial perspective. Plenty of good-looking things. Microsoft got hit on earnings and Chip Madness Monday. They're trying to figure it out. NDAQ still looks good. Looking for a small pullback. Plenty of things. Still plenty of expectations. Netflix for alerts this week. NVIDIA is a no for me. Chip Madness Monday. Can't do it. PLTR. It's got earnings, but I love PLTR. That's another. PLTR and KKR. Those were our two best stocks in the fall. Each of these had 3, I believe, trade alerts. All successful. Loved it. QQQ holding up. Roblox looks great. Love it. Looking for a pullback. It's got earnings, so be careful. Reddit. Yes. Rocket Labs. Yes. Rocket Labs is at the starting line of a trade potentially, as you can see. Continuing to move in that trend. SoFi, also worth consideration. TJX, I like. Toast. Yeah, there's plenty of good stuff. Tesla. Ooh, I don't know about Tesla. TSM. Nope. Chip Madness Monday. Can't do it. Twilio. Yes. We have plenty of strong things to be considering. Up. No, that's just the bullish dollar index. That's just the VIX index. Let's take a look at Walmart. Love Walmart. Looking for another trade. We just closed. The alert came here. Half profit taken in here. Not half, but some. I only took, I believe, a third. And then we have...
This is a reminder. Water the bonsai.
Whoops. Getting a reminder from my Alexa. Then we closed the rest of it here. Beautiful, beautiful Walmart trade. Now what? Now we want it to rest, get some water, and let's run it again. Yeah, that's what I'm looking for. Maybe out here. Okay, questions, comments, or concerns? Let me know. I went a little over. I know I tend to. Real quickly, don't forget, everyone, trading plan. What are we working on this week? We are working on section 3, systems, which is rules. What's the system name? Start with bounce trades if you have nothing. Bounce trades are easy. It's bouncing off support. You have a trend. It goes up, it pulls back, it hits support, it bounces. And then what? You're thinking, what? All of these types of rules. This is what I need for any system. Every system needs a complete one of these. So, Tony said, well done. If the newbie says well done, not like, ooh, that was too much, then I accept. I appreciate that. I'm glad to have you a part of the group. Please reach out with questions if they come. In the chat, if you're in Circle, go in there, ask questions there. There's spots for you to start conversations. Would love to have that. Glenn and I are looking forward to interacting with people continually in there. It's good to see everybody. Have a great rest of your Sunday. I'll see you in the morning, 15 minutes before the market opens. We'll translate this into the rubber meeting the road. As always, happy trading.